What's up, traders? Welcome to 7minutestocks.com, utilizing technical analysis to suggest security direction based on human emotion. Today is May 5th, 2012. This analysis is for entertainment purposes only. I do not and or will not make any recommendations to buy or sell anything. This is simply my opinion. All right, let's just get started here. This is the chart of the S&P 500. And did we have a big day yesterday on Friday? Huge day. We had this rising wedge over here. We broke down and now we confirmed, and we also broke down from the two moving averages. We just need a confirmation again because of the breakdown of the two moving averages on Monday. In the previous videos, I said, we broke down from this wedge pattern, and these two moving averages will give it some floor support. It obviously did not do that. It went down and it came down really hard, and that was all due to the non-farm payrolls disappointing. So what's going to happen on Monday? Well, Monday is normally a light volume day, and so they can float up the markets. Not to mention they have this whole weekend to make up any kind of story they need to prop the markets back up. But normally after a big move like this, what happens is we start trading sideways and start consolidating before we break down lower. The thing about this chart here, though, is what we can see is we are going to have some support on this triple bottom here. This triple bottom I would not take as a swing trade, but maybe possibly as a day trade. However, just keep in mind that we did make a lower high up here, as well as if we do break down from this line over here, our next stop is all the way down here. Ultimately, this dotted line here is obviously the mathematical calculation. I highly doubt it's going to get there. I mean, in all honesty, the mathematical calculation, I mean, I don't adjust it or whatever. It just gives me a number and I slap it on the chart, and that's where it looks. This 200 moving average might be able to get to this mathematical calculation before the S&P 500 makes it down here. However, that's a long ways down, so it may take a long time because of a down move consolidation, etc., etc. So this calculated line here, I would say, is the maximum that it could go to for price. It's also at a 382 and at this breakout point here, but we'll see. I'm going to leave this mathematical calculated line here just for fun purposes, if anything. Okay, moving. Now let's take a quick look at the SPY. We have two mathematical calculations here for in case it breaks out of this symmetrical triangle. We did have a breakdown of these two moving averages, and we also have this upsloping trend line here. Now there's a couple of ways of looking at this trend line. First way is we're still in this symmetrical triangle. Second way, being less conservative, if we move this up, which we technically could, we have this trend line here at the very tip here. We move this to the very bottom of the candle. Now, when you draw trend lines, it is okay to pierce through the tail, but not through the body. And if you can see, we actually had somewhat of a breakdown, meaning we did break down from this symmetrical triangle, but we just need a verification or a confirmation below, a close below this candle here to confirm the breakdown for the SPY. Okay, all right, so now on to the dollar. We had this head and shoulders pattern, and I said that we hit this neckline multiple times, which shows that gives it weakness. If we take this line away here, let's just take this line away. We do have, if you look here, we did break through the neckline, and we actually broke through the two moving averages here. On a technical level, this pattern has now been negated. The head and shoulders pattern is no longer in play. However, I'd like to see on Monday we get up and close above this candle here. Okay. Another thing we want to look at on the dollar is this trend line here. We can just draw this trend line here, and the dollar may come into this trend line and bounce off, or because we hit the trend line so many times, we may actually break through this trend line, and as you know, dollar up, market down, and dollar down, market up. Okay, so that's the dollar. Now let's take a look at the VIX. The VIX, I had mentioned in previous videos that I do expect a tag of this line up here. I had no idea we would actually break right through it in a single day. However, we did. On the Fibonacci retracement, we hit the 236. All we need now, we may actually pull back, but all we need now is a confirmation above. Sometimes after a breakout of a triangle, we pull back to retest the support line before going higher. Okay, so the VIX is the fear index. So as you can see, fear rose, and this is probably due to Europe situations, especially over the weekend, therefore bringing the markets down. And the VIX is similar to the dollar, where the VIX goes up, market goes down, and vice versa. Next thing I want to look at is forward. You notice forward, I mentioned before I had this mathematical calculated line here. This mathematical calculated line did not hold on the swing trade purposes, but I did say we would find support down here, in which case we did. You notice this dotted line over here? It's interestingly enough that this is also a mathematical calculated line. I had to readjust and modify it. I will explain everything in a different video. This video, I don't have very much time, but this mathematical calculation here has failed. We should see some support right around my stop out level, but we'll monitor forward. Alright, so this is a chart of Apple. You notice Apple is still stuck in this symmetrical triangle until we get a breakdown and a confirmation. If we do get a breakdown and a confirmation, then we're most likely headed towards this level here. This is the mathematical calculated line, and also in addition to that is a pivot point before I expect a bounce from Apple. Alright, the next stock I'm going to talk about is AXP. This is a stock that I'm currently in. So far, so good. The mathematical level has held thus far. We had pulled back on Friday. We did confirm we closed below this candle here, so it is a confirmation. We will have some support here at this X, and the mathematical calculation for max downside will be at this 20 moving average and these dotted lines. And we are also in an uptrend, so I don't want to take that chance of it actually hitting this trend line here before, stopping out. All right, last but not least, we have ABX, and then we have these two mathematical calculated lines here. This top one here was the original one in the previous video. As you can see, on Friday we were actually positive while the rest of the market was negative. It was a very nice sight to see, where I had all red. All my whole stock watch list was all red, absolutely red. The only thing that was green was ABX, and it was very interesting because this max move mathematical calculation stated that this stock would hold up, especially in a market that was so down. I mean, this stock only went down 9 cents when the market was down. The Dow was down over 100 points, and S&P and the SPY is down over 2 points, and the S&P was down over 20 points. I mean, it was just ridiculous how this stock was able to hold up. Let's take a look at the 10-minute chart here on this stock, and we'll see how well it held up. Between these two dotted lines here and here represents Friday, and each candle is 10 minutes. In the beginning of the day, we were positive. We're actually positive while the market was down, while the market was negative. These candles here were absolutely positive. Only towards the end of the day we had a sell-off, but you see this mathematical calculated line held up perfectly. Okay, now this bottom calculated line was put in afterwards, after I kind of massaged and manipulated the formula that I created. It's still a work in progress. Nothing is perfect, but I will explain everything in the next video on why technical analysis works. Okay, and that is your 7-minute stocks update, and you have a nice day.